Welcome back everyone to the Audacious Witch channel where we talk about the magic behind the stock market. The stock market has experienced a significant sell-off in recent weeks, down around 10%. The market has entered correction territory with concentrated selling in high-priced stocks exposed to a weakening consumer and tariffs. Among the affected companies is the trade desk. The stock has been impacted by both the sell-off and the recent growth forecast for Q1 of 2025. As a result, shares have fallen over 60% in the last 3 months. Despite the stock's overvaluation, we believe shares have now entered a margin of safety zone. Today we'll explore TTD's prospects, explain our bullishness on the company, and outline 3 key reasons why you should consider buying the dip. Reason number 1, growth. TTD makes software that helps businesses buy online ad space. The company's platform agnostic tool allows high-spend advertisers to reach their customers where they are, driving better ROI for marketers, and clients stick with them. In a market dominated by Google and Meta, TTD acts as a third option for corporate ad buyers seeking easy, consolidated access to alternative advertising inventory. We believe this is the future for the industry, with a single platform for executing and measuring ad campaigns that bypass Google or Meta's pipes. TTD's impressive growth, especially since its IPO in 2017, has been a major draw for investors. TTD's top-line sales have been steadily increasing since the stock began trading, with a remarkable jump from $650 million to over $2.4 billion in just 3 years. This growth, driven by a raise in total clients and increased platform activity, has resulted in a year-over-year growth rate of over plus 25% in the last 12 months, placing TTD among the fastest-growing companies in the U.S. However, concerns about less than rosy top-line growth projections have contributed to recent sell-offs. During the Q4 conference call, CFO Laura projected revenue of at least $575 million, reflecting 17% growth. However, we believe the company is better positioned than many think. Firstly, the firm is still early in key markets like CTV and programmatic advertising. CTV advertising is a small fraction of total TV ad spend compared to linear. Retail media is rapidly scaling, evolving from an emerging trend into a core digital advertising channel. In most global markets, decision programmatic is still in its early stages of adoption, with tremendous long-term growth potential. Secondly, recent misses were due to short-term corporate reorganization. Therefore, when considering the company's growth trajectory, the market's reaction makes sense, but we believe this is more likely a bump in the road to a much higher TAM and revenues in the long run. Reason number 2, profitability. The growth story and the stock took hits, but we think it's short-term noise. What about EPS? High-growth SaaS companies often have excellent revenue but weak margins or even negative profits. TTD, however, has a strong margin situation that's improving. TTD's sales were growing at 25% annually. Net income and EPS growth follow suit, demonstrating cost control while revenue growth continues. If TTD achieves net margins near 30%, it could significantly boost the stock due to potential growth margin and valuation synergies. TTD's track record on profitability is impressive, and we expect continued top-line growth to benefit the bottom line. Regarding valuation, TTD's stock has declined 62% in the last 3 months, but some may still consider it expensive. Historically, TTD has earned a premium from investors. TTD averages a 15x revenue. Before the recent forecasted revenue slowdown, this premium was attributed to high-quality revenue and growing margins. Even now, TTD is still priced at a premium by some measures. While this may not be a drastic deal, given TTD's unlikely ability to replicate 2021's growth rate and valuations, if the company can reaccelerate growth in the line with its TAM and opportunity, there's a real shot for an investment now to enjoy organic growth and multiple expansion in the future. This opportunity only comes in the moment. If you want to own it, take it, as I just bought more recently.